What if I told you that some of the biggest stock market winners in history started out as penny stocks, trading for less than $5 a share before they completely took off? Amazon once traded below $5. So did Apple. So did Monster Beverage, which turned a single $1,000 investment into over $4 million if you held it long enough. Now, I'm not here to promise you those kinds of returns, because the truth is, penny stocks are risky, and anyone who tells you otherwise is lying to your face. But what I am here to tell you is this. In 2026, there are 10 stocks trading under $5 right now that have real catalysts, real momentum, and the kind of setup that could turn a small position into something you'll actually talk about at the dinner table.
Damn.
So if you've got a few minutes and you're serious about finding high upside opportunities in today's market, stay with me because this one's worth your full attention. Before we jump in, a quick but important disclaimer. Nothing in this video is financial advice. I'm not your broker. I'm not your financial advisor, and I have no idea what your personal situation looks like. Penny stocks are speculative by nature. Prices swing fast. Liquidity can be thin. And yes, companies can and do fail. Do your own research. Size your positions responsibly and never invest money you can't afford to lose. With that out of the way, let's get into it. The first stock on our list is KULR Technology Group, ticker KULR, and this one is quietly becoming one of the most talked about names in the thermal management space. KULR develops technology that helps manage heat in batteries and electronics, which sounds boring until you realize that thermal management is one of the most critical, unsolved problems in electric vehicles, energy storage systems, and 5G infrastructure. Bad thermal management is why batteries catch fire. It's why EV ranges degrade. It's literally $1 billion problem, and KULR is building the solution. The company posted a 44% year-over-year revenue increase in its most recent quarter. Analysts have slapped a strong buy rating on it, with a price target of $5, which from its current level near $1.28 represents a potential upside of nearly 300%. So that's not a typo, 300%. Now, whether it gets there is another story. But the fundamental case is real, the revenue momentum is real, and the sector tailwinds behind EVs and energy storage are absolutely real. The second name I want to put on your radar is BigBear.ai, ticker BBAI. And if you've heard the name Palantir thrown around in conversations about defense-focused AI, think of BigBear as the more affordable cousin. This company builds AI, machine learning, and computer vision tools specifically for national security and defense applications. We're talking about real contracts with real government clients, not vaporware, not hype. Now, BBAI had a rough patch after disappointing earnings late in 2025, and the stock dropped hard from nearly $10 down to the $3 range. But here's the thing. The balance sheet has been cleaned up. Debt has been reduced by over 90%, and the 2026 revenue guidance is still pointing in the right direction. When defense AI sentiment picks back up, and with the current geopolitical environment, that's a when, not an if. BBAI is the kind of ticker that moves fast. Analysts who follow this space see a recovery toward the $4.50 to $5 range as a very achievable first target if the stock stabilizes and any positive catalyst lands. Number 3 is Ocean Power Technologies, ticker OPTT, and I want you to hear me out on this one before you move on. OPTT makes wave energy platforms, devices that sit in the ocean and generate electricity from the movement of waves. And they've now pivoted to also include AI-capable maritime solutions for defense applications. They recently shipped an AI-enabled power buoy for defense use, and their offshore testing logged 100% data uptime, even during hurricane force conditions. That's a technically impressive result. Now, revenues are still small. We're talking under $1 million per quarter, so this is unquestionably a speculative early-stage play. But the company sits at the intersection of two of the hottest macro themes in the market right now, renewable energy and defense technology. The market cap is relatively tiny, which means even a modest contract win or a major partnership announcement could send this thing flying. Our fourth pick is New Era Energy and Digital, ticker NUAI, and this one has been getting serious attention from institutional analysts in recent weeks. The company pivoted into AI infrastructure in mid-2025. And it's now developing digital infrastructure and power solutions specifically for AI-focused data centers. In April of this year, Northland initiated coverage with an outperform rating and an $11 price target in Texas. Capital followed with a buy rating and an $8.60 target. Both firms see the company as an undervalued early-stage AI infrastructure provider that's close to landing its first major tenant at its Texas data center campus. If that tenant announcement comes through before the end of 2026, this stock could move dramatically from its current sub-$5 level. The AI data center boom is one of the most powerful structural tailwinds in the entire market right now, and NUAI is trying to ride it from the ground floor. Stock number 5 is Rigetti Computing, ticker RGTI. And if quantum computing gets even a fraction of the attention it deserves in 2026, this is one of the names that will be in every conversation. Rigetti recently achieved a 99.5% median fidelity rate for 2 qubit gates on its 36 qubit modular system, which is a genuine technical breakthrough in a field where precision at that level is extraordinarily difficult to achieve. Yes, the stock has been volatile. Yes, it pulled back hard earlier in 2025 when NVIDIA's CEO made comments suggesting that commercially viable quantum computing is still years away. But here's the nuance. Near-term skepticism and long-term potential are not mutually exclusive, and traders who understand that distinction can position ahead of the crowd. Rigetti has the technology, the team, and now the performance data to back up its claims. For a sub-$5 entry, the risk-reward here is genuinely compelling. Number 6 is Red Cat Holdings, ticker RCAT, and this one has a headline that's almost hard to believe. 1,985% revenue growth, nearly 2,000%. The company makes drone systems for defense applications, and it recently secured the Black Widow Army contract, a military deal that turned it into one of the fastest-growing small-cap defense companies in the market. Now, when a stock sees that kind of revenue growth, the question becomes whether the business can sustain and build on it, or whether it was a one-time spike. The answer here looks encouraging. The Army contract is ongoing. Drone autonomy is becoming a bigger priority across all military branches. And the company has the kind of government relationship that many competitors would kill for. This is a genuine momentum stock, with real fundamental support underneath it. Our 7th pick is Ondas Holdings, ticker ONDS. And what makes this one interesting is the combination of drone autonomy technology and a partnership with Palantir. Yes, a Palantir. Ondas reported 629% revenue growth driven by its drone and rail automation businesses. And its alignment with Palantir gives it a credibility boost that most sub-$5 stocks simply don't have. When Palantir puts its name next to yours, institutional investors pay attention. The drone automation space is growing rapidly, and Ondas has exposure to both the commercial and defense sides of that market. This is a company that's actually building revenue, not just burning cash on promises, and that distinction matters a great deal when you're looking at penny stocks. Stock number 8 is Nauticus Robotics, ticker KIT, and this is the deep-sea play on the list. Nauticus builds subsea robots designed for underwater operations. Think ocean infrastructure inspection, deep-sea mining support, and offshore energy work. The world's appetite for deep-sea minerals and critical materials is accelerating as the battery and tech industries continue to expand. And Nauticus has a first-mover advantage in the autonomous underwater vehicle space. The company has been building out its order pipeline, and any significant contract announcement here could be the kind of catalyst that moves the stock quickly. For investors interested in robotics and resources, KIT offers a unique angle that you won't find in most other penny stocks. Number 9 is Comstock Inc., ticker LODE. And this company is doing something that doesn't get nearly enough attention. Using artificial intelligence to accelerate mineral discovery and converting natural resources into renewable energy products, the decarbonization theme is bigger than any single election cycle or news cycle. It's a decades-long structural shift in the global economy, and Comstock is positioning itself at the center of it. The company has been actively presenting at investor conferences to raise its profile, and with the right contract or partnership announcement, LODE has the kind of setup that can generate sharp short-term moves while also telling a credible long-term story for more patient investors. And our 10th and final pick is Serve Robotics, ticker SERV. And this one is for the true believers in the autonomous delivery revolution. Serve Robotics makes sidewalk delivery robots, the kind you might see rolling along a city's sidewalk carrying your food order. And it's backed by the same ecosystem that has made names like Uber and Uber Eats household words. The autonomous last-mile delivery market is projected to grow explosively over the next several years as labor costs rise and consumer demand for convenience continues to climb. Serve Robotics is early, which means it's risky. But it's also exactly the kind of disruptive, tangible, real-world technology company that has historically driven massive returns in the penny stock space. When the timing aligns with broader market adoption, so there you have it, 10 penny stocks under $5, spanning AI infrastructure, defense technology, renewable energy, quantum computing, robotics, and autonomous delivery. Each one of them has a real catalyst, a real story, and a real reason to be on your watch list in 2026. But here's the most important thing I'll say in this entire video. Don't just blindly buy everything on this list because someone on YouTube told you to. That's not a strategy, that's gambling. What you should do is pick 2 or 3 names that align with sectors you actually understand. Do your own deeper research on those specific companies and size your positions in a way that a complete loss wouldn't devastate you. Penny stocks are the highest risk, highest reward corner of the market, and the people who win in this space are the ones who combine conviction with discipline. If this video gave you some ideas to dig into, do me a favor and hit the like button. It genuinely helps. This channel reaches more people who are serious about learning how to navigate these markets. If you're not subscribed yet, now's a good time because we break down opportunities like this every week. And drop a comment below telling me which of these 10 stocks you're most interested in. I'd love to know which one caught your eye. Till next time, stay sharp, stay disciplined, and as always, trade smart.